Hi, this is Cayden from VIA Value Investing Academy. Now, thanks for joining another evening of our YouTube live session. And for this session, it's going to be very exciting. But before that, let me just check how many people are there in the YouTube live right now. That's what I meant. It's about maybe 40 people. Let me just check to make sure that my YouTube is operating, right? Wait, yeah, 43. Okay, it's quite strange, right? Mine is a bit like hang. Let me just type the chat. By the way, if you are able to see me and hear me, right, is it okay? Just type on the chat. Type something like 1 or something so that I can. Yeah, because it's quite strange, huh? My YouTube live is not. It's not moving, right? Yeah. Is it okay right now? Okay, yeah. Oh, now it's okay. Yeah, just now my YouTube was hang. Okay, good. So if you can hear me and see my slide right now, yeah, can you just type 1? So I need my teammate. Can you just share slide, right? Okay, good. Wendy, Susie, okay, Sophie. Okay, very good. So let's get started. If you join us right in the very beginning at 7:30, right, you would be able to see a very short movie clip. I can't remember. I don't know what's the movie all about, but it's a war movie. And if you look at my first slide, right, this is a nuclear explosion. So when we talk about war, right, the first impression that people have is always a battle about tanks, ships, and so on, or maybe even a nuclear explosion. But interestingly, many years ago, Bill Gates said that in the future, war, right, may not what we have in mind, which is such a nuclear war and so on. So he shared, I think, if I'm not wrong, during one of the TED Talk, and he shared a picture that looks like this. So in future, the war may be microbes, or rather virus. And, unfortunately, in year 2020, COVID virus came, and then all of us went to a pandemic, lockdown, and so on. So, until today, it's been 2+ years. So this COVID virus is still around. Yeah, so we are fighting like a war, right, against the virus. And then, interestingly, since a couple of years ago, there's another separate war that's going on quietly in certain industry, right? So that's not a war between nuclear countries or the war between virus or microbes. So it's the war, right, between countries who are able to produce semiconductor chips. It's quite interesting, right? Yep, quite interesting. Now, but before we talk about the detail, right, the nitty-gritty about what this inverted commas war is all about, I just want to introduce certain terms that's important for us to know the overall context. So sometimes you hear, ministers, prime ministers talking about this term called the GDP. Just a quick understanding about such terminology, right? Now, GDP stands for Gross Domestic Products, and it measures the monetary value of the goods and services that's provided by any nation, right? Over a certain time period. For example, they could say, oh, the GDP of Singapore is 1st of January until 17th of August. Oh, this is the GDP. Yeah, so the GDP, right, it has a unit in terms of dollars, which means that if a country's GDP is huge, right, it sort of gives the impression that the country is very rich. Why? Because the businesses in that country produce a lot of services and goods, and they are always measured in terms of dollars. So that's a GDP. Yeah. Then there's another term that's very similar to GDP, right? Is GDP per capita. It's like earnings, then earnings per share. Okay, so GDP per capita. So GDP per capita is simply take the GDP, which is the above, right, as a numerator, and then divided by its total population. But again, when we want to say that a nation is strong, right, is big, is wealthy, usually we look at the GDP alone rather than the GDP per capita. Okay, but again, I'm going to show you right now in terms of the world, right, who are the biggest GDP players in the entire planet. Now, but before I share with you the so-called a visual, right, of who are the biggest player. Now, this graph, right, shows the GDP growth for two countries. One is US and one is China. Okay, so the black one is US and the blue one is China. So you realize that for the GDP growth for US is quite exponential, it's a smooth curve, and then it goes up, right? For China, do you realize that from this point in 1960, right, until somewhere around 1996. So in other words, for 36 years, their GDP growth is very stagnant. Yeah, so in other words, in the world, right, US is the brother, is the eldest brother, you know, the biggest one, because my GDP is the highest, right? So at this point, do you realize that China sort of start to rise, and by the time it reaches year 2020 over here, the gap, right, of the GDP growth sort of narrowed, versus here. Here is huge, right? Yeah, here is sort of narrowed. Yeah, so China suddenly catch up, right? And if we put all other countries together and we look at the GDP, right, yeah, of each country, and then you turn it into a map. This is quite interesting, huh? Yeah. So who is the biggest brother today? United States. But China used to be very tiny, right? And then right now, do you realize that in terms of the surface area, it seems like China is coming closer, catching up with US. Which is why do you realize that US right now has a lot of things to do against China, right? So I think a couple of years ago, before pandemic, Hong Kong has a riot, right? Several riots. I think the riots are so serious, it became like terrorism. Yeah, so I still remember Nancy Pelosi was saying that, oh, you know, what a beautiful sight at Hong Kong when they saw the so-called terrorist act. Yeah, then, of course, recently is the Taiwan issue. We'll talk more about this later on. But remember, this is not a political video, right? I just want to show you the economy, why US is a bit like uncomfortable, upset with the rise of China. And if you look at the GDP per capita, which is the GDP divided by the population, right? The ranking sort of change. So you realize that suddenly Singapore is in this map. Can you see Singapore? Singapore is second. Wow, like a big deal, right? But remember, this is the GDP per capita, per capita divided by a population, right? Wow, so, you know, per person, the GDP is about 97,000. So if you rank with the rest, wow, we are really like a big deal. But of course, we don't feel rich. How we don't feel rich? Because this is GDP, this is not the average salary, right? Yeah, but anyway, the most important thing is, I want to show you the slides, is right now, China has rise in terms of GDP, it's just second in place, just right behind US. And there were some economists were saying that, I think by 2030, right, China may overtake US. And of course, Biden, right, I mean, if he's still around 10 years later, I don't think he want that to happen. Yeah, because the Westerners once ruled the world, right? So right now, a Chinese rule the world. Yeah, so right now, remember the reason why I tell you this is because of the rise of China, and there is a war going on. And the war is no longer the nuclear war, but the war is the chip war. And if you look at this famous magazine called Economist, China, America, Silicon Supremacy. So you see, America cannot afford to ignore China's semiconductor ambition, and it cannot simply tame them either. So this one put a helmet, right? War and a semiconductor chip. Then you can see other articles. There's even this guy called Chris Miller, right, who has written a book, I think this is 2018, and talk about the chip war. Yeah, chip war, the fight for the world's most, not second place, right, most critical technology. Okay, this is interesting. Then most recent, right, this is the 1st of July 2022, right? So there is a chip war. So Korea says big to stay ahead of China. Oh, so Korea also want to come in to be part of this war, right? What else? This guy, Bruno, right, say the future world order will be decided by the war over semiconductor. So now Taiwan comes in, right? You know, just now in the world map, Taiwan is very tiny, right? So Taiwan, as the global leader in microchip manufacture, will be its geopolitical battleground. Yeah. So US, China, and there's this lady, right, Tsai, right, that appears in between. Now, I just saw one tweet just a couple hours ago. Maybe I showed you this tweet. I think things will not stabilize after you have seen this tweet, right? So Tsai Ing-wen, right? I welcome the start of the talks under the US-Taiwan initiative. I don't know what initiative is this. 21st Century Trade, a major step. In other words, this Tsai Ing-wen want to continue to talk to US. Now, but from China's perspective, Taiwan is a province. So the last thing you want as Xi Jinping, right? You want the mayor of the province initiate talks with the leader, right, of US. So in this case, the Tsai Ing-wen didn't say that, oh, Taiwan want to gain independence, but her action, right, seems to edge towards independence. Yeah. So right now, as Nancy Pelosi, a first visit to Taiwan, already created this barricade of a military surrounding Taiwan. So I'm not very sure what's going to happen after this. Sorry, let me just kill this fly first, right? So it's Cayden and the fly have a war. Okay, now, so now, of course, the interesting thing is that do you invest, should all of you, since Taiwan, right, has this global leader called TSMC, which is the largest semiconductor manufacturing company in the world. So the question right now for today's topic, right, because you're already abreast now, so should any one of you consider investing in this company? Now, but before I carry on, I just want to let you know that the production of a tiny little chip, which eventually end up in a phone and a PC, is actually highly complex, right? Yeah. So to make my life and Hillary's life much easier, so what we're going to do instead of talking and then flashing slides, right? So we're going to show you a video which describes about the process of the chip production. And coincidentally, the context of this video, is in Singapore. They have a factory, right, in Singapore that produces this chip. But before I carry on, let me just manage you, right? The video is about 8 minutes long. 8 minutes long, to us, it's quite long, right? But we have to play this video versus, okay, can you please see the video on your own? Yeah, we have to play this video, and then subsequently, when Hillary comes in and talks about this TSMC, right, life will be much easier for Hillary and all of you. Okay, so I'll let our colleague play this video. Thank you.
This chip controls your car, stores data about what you bought, and runs the software on your laptop. These chips have come to power our lives, and only a handful of fabrication plants or fabs in the world have the know-how and infrastructure to make them. So most of the chips are produced outside of the US, like at this fab in Singapore.
To build a fab is a big investment.
And now the world is running out of chips because companies can't make them fast enough.
When order really flooding in, we had to turn on every single piece of machine that we can find in the factory.
The pandemic rattled supply chains and led to a surge in demand for electronics when people were stuck at home. While a perfect storm of natural disasters, a fire at one of the world's leading auto chip makers, and the ongoing US-China trade war disrupted the production and distribution of semiconductors. This shortage has affected whether you can drive a Jeep off the lot or buy a new PlayStation 5. We visit one of the world's largest contract chip makers to see the complex process and why there's no quick fix to the supply crunch.
Chip usually takes about 2 to 3 months to make.
Daniel Rajkumar is a manufacturing manager at one of the fabs at Global Foundries. The American company is the third largest contract chip manufacturer in the world. Companies like Intel, AMD, and Bosch give some of their circuitry designs to Global Foundries. And then its fabs like this one in Singapore manufacture the chips.
Once we finish the fabrication of the circuitry, it has to go for testing, it has to go for repackaging.
Altogether, it could take as much as 6 months before a chip is ready to go into your tech. This long process starts here, at the center of the fab called the clean room.
Before going into the clean room, we need to gown up.
Because chips can be as small as a fingernail and crammed with billions of components, they have to be handled with great care.
Any form of dust that falls onto the wafers, it will cause the chip to be defected. And then now we are able to go into the air shower. Okay?
Global Foundries says this clean room is 1,000 times cleaner than an operating room. And it also takes up a lot of space.
2 footballs field, that's how big it is. We have about 700 to 800 machines.
It's also yellow in here because chips are sensitive to UV rays, and this lighting has none of that.
This is always the first step.
The starting material for any chip is here in this room. These super thin discs are called wafers and made from silicon. Eventually, one of these will produce about 1,000 to 1,500 individual chips. But before it does, the wafer is placed in a special container.
We have the raw silicon. We are now trying to register this material and transfer it into our wafer carrier.
Each carrier can hold up to 25 wafers, and there are about 4,000 of these moving around the facility at one time.
We are also the source of particles when we go into the clean room.
So never once during manufacturing does the wafer come in contact with any of the workers.
It will bring the wafers directly to the machine, and in this foundry, basically 95% of all processing jobs is fully automated.
These raw wafers are cleaned before starting a process that Rajkumar describes as similar to making layered cake.
The main function of a diffusion furnace is basically to grow layers of oxide or to dab a nitride onto the silicon.
That creates a protective coating. Next is a layer that makes the wafer light sensitive, so it's ready for one of the most important steps called lithography.
This is the most expensive module in any wafer foundry. The number of lithography machine will define how many wafers you can produce in a month or a year.
One lithography machine can cost anywhere between $25 million to over $100 million. And that's because it's responsible for adding layers of the circuitry, basically electronic components like transistors and diodes, that allow the chips to eventually store data or run apps.
What I'm holding here is basically a pattern design of a circuitry.
Inside this pink box is a photomask, which is like a glass stencil, and clients send these directly to global foundries. The lithography machine blasts UV light through the photomask and prints patterns on the wafer over and over again. The difference between an advanced chip for a 5G smartphone versus one for your credit card comes down to the type of wavelength that's used. Shorter wavelengths mean you can etch finer features and get more performance out of the chips. Some of these transistors are so small that they're measured in nanometers and compared to DNA strands. Once the circuitry pattern is imprinted, the wafer has to be charged.
These machines use a lot of energy to produce electrical charge that allows the electrical to flow through the chip and also creates the different type of function for your electrical chips.
Rajkumar says many of these steps are repeated hundreds of times before the fabrication is complete. And to get to this point, these orders have to be made at least a year in advance.
I have demo wafers here to another.
The finished wafers are tested, then finally sliced into individual chips.
One is the small die wafers, which is mainly used for bank cards or chips. And then you have the other one, which is the bigger die wafers, which can go into other kind of applications like computer processing chips or electrical appliances.
Global Foundries says its fab in Singapore typically makes about 600,000 wafers a year. But with the recent surge in demand, it's making around 120,000 more.
This whole year is fully booked out. We don't have any more space for new customers.
Tan Yu Kwong is the Vice President and General Manager of Global Foundries Fab 7 in Singapore, and he says there's no quick solution.
There's no space that you can house another lithography tool or any other tools that you like to buy. It is a lead time easily 1 year to 15 months before you can see a tool that is coming into your factory.
It's not just a backlog of equipment, but Tan says expanding or building a fab from the ground up would require deep investments, more than the $1.4 billion that Global Foundries has already committed to spend this year on expanding its 3 fabs around the world.
You easily need to spend $7 billion to $15 billion depending on the size of the factory you want to build, and the technology that you're going to develop can easily take you decades to build the foundations.
So to fill as many orders as quickly as possible, the company turned on idle machines and opened this factory control tower. Engineers here have a bird's eye view of the entire fab, and the green boxes show which machines are running at max capacity. Before this control tower, when there was a problem, engineers had to sort through data and piece together information themselves.
Compared to today, just looking at the screen, you already know that this is a piece of machine. You need to pay attention now.
Tan says any time saved is precious, but to truly address the shortage, the company is working more closely with its clients, suppliers, and the government.
We're going to continue seeing more government support because it is becoming such an important part of the entire global supply chain.
There's no reason why Americans should wait. We're investing aggressively in areas like semiconductors and batteries.
The Biden administration has proposed $50 billion to boost America's chip production. That's because while the U.S. is one of the largest semiconductor markets, the majority of the complex and expensive manufacturing happens at a few companies based in China and East Asia.
That's because the world's biggest foundry in the world, TSMC, is located in Taiwan. Samsung also has a sizable foundry, as well as some Chinese players.
This concentration of fabs means any disruption to the supply chain, like a drought in Taiwan, or political tensions with China, can have big ripple effects, especially when global demand is expected to grow by more than 12% this year.
We have technologies like 5G and artificial intelligence, and these types of advanced technology means that more chips will be needed to operate the devices that we use every day.
To meet that demand, the Chip Industry Association says it will require an investment of $3 trillion globally over the next 3 decades. So for us to buy new devices, Tan says his fab will work around the clock as it turns this challenge into a business opportunity.
from the ambitions of wanting to grow the company, this is definitely a positive point for us. This over demand is going to be around for a while.
Hi, ladies and gentlemen, welcome back. After watching a video, you should have a very brief idea of the sensitivity, right, of foundries which produce this semiconductor chip. And in the last, I think 1-2 minutes or so, right, the video showed a pie chart. And the largest foundry that produces this TSMC, what am I saying? Exactly say now. The semiconductor chip is actually TSMC. And of course, this TSMC is located in Taiwan, even though it's listed in the US. Yeah. So let me just show you the next slide, right, before I carry on. I think before this YouTube live, there were a couple of people who dropped us email, hey, today we're not free, how is it, we want to see the video and so on. Now, just to let you know that all the YouTube live, right, by default, after tonight's session, you can always watch anytime because by default, the video automatically stored in the YouTube. And I'm going to flash out the QR code, right? So I'm going to give you a couple of seconds to just scan this QR code. Yeah, so that in future, when there is any very good production done by our team, you will be the first to be alerted of. So if you look at this VIA, right, you can realize our subscribers is about 6.94K. We just need about 600 more, right, before we cross 700. So this is very important to us, and you can see this video over here, right, Taiwan Semiconductor Manufacturing Company. So while you're so you now just scan, very, very quick, you just scan, a message pops out, just click auto-subscribe. Yeah, so as you are scanning, just to let you know that other than today's session, we have been talking about many things. And if I'm not wrong, right, we should be the only education company in Singapore that talk about different sectors. If you have been following our YouTube live for the past 3 or 4 sessions, we have been talking about the recession, we have been talking about the bear market, we are talking about the 11 sectors. Out of 11 sectors, we have been talking about 3 industry, right? 3 sectors that beats the market. One of them is consumer discretionary. The next one is healthcare, right? And the last one is the IT. And of course, for this Taiwan Semiconductor will be under the IT sector. And today also marks a session where we will end so-called the sharing of our 3 sectors. So the next session, I think we plan to talk about Singapore. So I'm not very sure whether are you prefer to listen to Singapore or US? Hey, if you don't mind, before I go to the next slide, can you just type something, right? What kind of a so-called investment-related topic that you want to hear? Do you prefer to hear something related to US, right? All this are more exciting, huh? Politics, war, US or Singapore. Okay, can you just type either US or SG if you don't mind? We have 123 people you're watching. Just type US or SG. So in the meanwhile, while you're typing, I'll just read out this disclaimer, right? Because later on, we're going to specifically talk about one company called TSMC, which is the largest foundry in the entire planet. So maybe, I think to protect everyone, just to let you know that the case study that we're going to show you in the next couple of seconds, right, is solely to illustrate the application of value investing because we are value investors, methodologies and various valuation methods in the context of real-life companies. So remember, right, under no circumstances does any information provided tonight, right, which is the TMSC, recommendation for you to buy, sell, or hold this TSMC. No, don't have. So I'm going to skip this until the second part. Okay, so the continue, right? You either type US. Later we'll count, right? We'll count. Then we see next session we want to do US or Singapore. Now, in no event shall VIA or me and Hillary, right, be liable to any of you, guest or third party for any damages of any kind arising of the use of our video that's shared here, right? Yeah. So remember, neither My Kinesis Investment Private Limited, VIA, nor me and Hillary are operated or affiliated, right, with any broker, dealer, or licensed financial advisor. So in other words, MAS didn't give us a license to say, hey, you can recommend or whatever, so cannot, So remember, right, neither VIA nor authors makes any representation nor warranty as to the completeness or accuracy of the information in the case study. Okay, so maybe before I pass it to Hillary, I just have a quick look. Quick look, right? I didn't go and count, but it looks like it's US. Okay, it's okay, right? Later I'll count when Hillary is doing our count, right? Okay, so right now I'm going to hand over to Hillary. This time around, Hillary is going to explain to you slowly because oh, by the way, before I start, just to let you know that for me, right, my background is in biology, right? Hillary, her background is in chemistry. So neither a biologist or a chemist, right, is a guru of TSMC. But what we did was we were just using our scientific thinking, right, try to dig out information to present to you as many facts as possible. Okay, huh? Okay, so I'm going to hand over to Hilary right now. Thank you.
Hi, good evening, everyone. This is Hilary here. So I'll be taking over regarding the TSMC. So first off, we will look at what is CHIPS Act, because after US President Joe Biden has signed off the CHIPS Act, it has kind of created some excitement among the industry, like, oh, the industry is going to grow bigger, grow better. So what is really CHIPS Act? So here, this is where US President Joe Biden is signing and everyone is cheering. So here, people will say that, okay, so now it's time to invest in semiconductor companies. But wait first, before you start to press buy, let's find out what really is CHIPS Act. So when I was doing this research, it's like CHIPS Act means certain subsidy or incentive for the semiconductor. So when I dig on further, then I found out something interesting. So here we will share more with you all. So first off, it's actually an incentive to encourage the chip manufacturers to produce the semiconductors in the US country, on US. So they allocated about 52.7 billion subsidies for this, which is mainly to increase the chip manufacturing facilities in the US because they wanted to boost the chip production in US and also to ease the semiconductor shortage. And also to boost the research for the advanced chip technology, because earlier on the video was showing the lady that says that most of the technologies is now moving forward to 5G, AI, all of this, they need advanced chip technology to produce them. So what really is this chip technology? Later on when we are exploring TSMC, we will further explain more about that. And now we will have a quick look on the breakdown of this subsidy. So this one, they allocated about 52.7 billion USD for this. And this is the overall breakdown. So you can see that most of them, they are breakdown for semiconductor related research and also some manufacturing. And this is the part that is being allocated mainly for construction and also expansion of the manufacturing facilities that is related to semiconductor production. And in this video, Yahoo Finance actually invited a research analyst, which is an expert in US semiconductor industry, to further explain about what is this CHIPS Act and how it will influence the semiconductor industries and what does it mean for the investors. So I'll let my colleague Irfan to play the video so we can have a look at it.
Well, President Biden has signed the CHIPS and Sciences Act, a $280 billion law, which aims to turbocharge semiconductor production in the U.S. For more on the legislation and what it means for the wider industry, let's bring in Stacy Raskin. He's Bernstein Research Managing Director and Senior Analyst of U.S. Semiconductors. Stacy, we'll get into the moves of the semis today. Certainly not a good day in the markets, but let's start with what we have heard from President Biden. He's obviously touting this as a big bet on U.S. manufacturing at a time when we have seen the dramatic shift over to Asia in terms of market share. How much of that share comes back as a result of this?
So you'll see some, and this is the whole point of the CHIPS Act. It's not really going to determine over time how much additional capacity gets built worldwide. That's going to be determined by demand, not by politicians. The goal is to determine where some of that incremental capacity gets built. We obviously want to get it started here in the U.S. because we are getting increasingly dependent on places like Taiwan. And so the CHIPS Act will actually help some of these projects get started here in the U.S. versus getting built elsewhere. Now, is it going to structurally improve the percentage of total worldwide semiconductor capacity that is here in the U.S. versus elsewhere? Probably not. I think the U.S. right now has something like 12% of total installed capacity. I would be surprised if this act, which is about a little over $50 billion over 5 years, structurally improves that percentage, just given the magnitude of the types of investments that one typically sees in this space. But it is a start, right? You have to start somewhere, and it will at least get the ball rolling on some of this.
Stacey, as we continue to watch what's happening in the U.S., this comes at a time when there's also discussions about building some kind of CHIPS alliance among value or like-minded countries, if that's the way you want to put it. You're talking about countries like U.S., Japan, South Korea. I mean, you're already seeing some decisions being made because of this CHIPS Act from foreign players. How much of that also kind of spurs that movement towards the U.S. or away from China?
So we're trying to create, something like some sort of a push against the growth of China. I mean, we've been doing this for a while. I mean, even under the Trump administration, there were a lot of sanctions that were put in place, both on semis as well as the broader supply chain. They sort of chopped Huawei's knees out from under them. So they've been doing everything that they can to try to, at least on a relative basis, strengthen sort of the Western push on semiconductors versus what's going on in China. So this is a continuation of that. The problem is, and it's very, very difficult to completely disaggregate. These supply chains are very tightly interlinked, not just in semiconductors, but everything upstream and downstream that happens. It's very difficult to completely carve off sort of like the Western side from China. They don't really exist very well apart. It's going to be very interesting to see how this whole thing evolves over the next, 5, 10, 20 years. But obviously they are trying to, at least to the extent that they can, reduce their dependence on what's going on in China right now. And some of these new initiatives and new partnerships are a step along those directions.
Yeah, Stacey, another company that, we've been watching closely, Intel, and I can't help but think, I was looking at your notes from, I think it was June, where you said we see no reason to own Intel, and specifically said they had a questionable growth model. This is before the most recent pullback that we saw on the back of their quarterly results. I mean, this is a company that's saying we're building the future of U.S. manufacturing in chips. What's your biggest concern?
Well, this is part of the problem. So they're going to get a bunch of money from the CHIPS Act. Yes. Now, it doesn't just go on their balance sheet. They actually have to put it in the ground. They actually have to build factories in order to get this money, and they're going to be deploying a lot of their own capital at the same time. But that's the question: is what happens once these things are built? Are they going to be able to fill them? They're trying to actually build a third-party manufacturing business to make parts for other players to try to reduce that dependence on areas like Taiwan. It's very questionable whether or not they're actually going to be able to attract enough customers in order to do that. And I'll be honest, frankly, if we were really, if the goal was really to structurally improve the amount of actual like third-party demand that's getting manufactured in the U.S., I don't know if Intel is the right horse to bet on. I mean, the right thing to do might have been to give TSMC a bunch of money to build a ton of fabs here, because they already know what they're doing in terms of third-party foundry manufacturing, and they already have customers, right? So the question of whether or not in like 5 years Intel can actually build a real viable business out of this, I think is hugely open for debate right now. But taxpayers are going to be, we're going to have a front row seat to whether or not that they can actually do something with this.
All right, we're going to have to follow up in, I guess, about 5 years. Stacey Raskin, Bernstein Research Managing Director and Senior Analyst of U.S. Semiconductor.
Hi, everyone. Welcome back. So I hope you have enjoyed the video that Stacey has explained regarding the CHIPS Act. So from this video, we can come up to two conclusions. First thing, the reason why US government has set up this CHIPS Act subsidy is to entice the chip manufacturers to bring back the manufacturing facilities and capacities back to the US soil. Because semiconductor was first being invented and manufactured by Intel in US, but then due to globalization, they shipped out the technology to overseas, because at overseas they can manufacture even cheaper chips. Unfortunately, currently the global production is now in Taiwan, and we know some of the news that Taiwan is kind of not in a good relationship with China, so it kind of threatened the chip production globally. So this is one of the reasons why US wanted to bring back the technology back to US to manufacture all these chips. And then the second thing that Stacey mentioned is that he mentioned that only companies that manufacture the chip will be getting the subsidy. So what does this really mean? And after this video, you'll be thinking okay, so I know how the CHIPS Act affects the semiconductor industry, but what does it mean for me? So first thing is that the CHIPS Act is set to revitalize this US semiconductor manufacturing industry, and the benefactors are actually the major chip manufacturers and also the suppliers, which are Intel, Micron, TSMC. It's because they have the fabs to manufacture the chips. Unfortunately, some are not really included into the CHIPS Act, which is the chip designers. So chip designers, they only design the circuitry, which earlier on the video that is showing on Global Foundries, you see the person was holding something like a box, the pink box. That one is actually the design to be printed onto the chips. So these chip designers, which are NVIDIA, Qualcomm, and also AMD, they only design the circuitry, but they don't manufacture the chip. so they may not be enticed for this CHIPS Act subsidy. So before you happily go and say, oh, NVIDIA is not a good stock, I'm going to buy because it's a semiconductor company, and CHIPS Act is an incentive for semiconductor companies. So this is one of the differences, is that it's only enticing chip makers, but not for chip designers. Okay, so now we will have a quick deep dive into TSMC. So what really is TSMC? TSMC's long name is called Taiwan Semiconductor Manufacturing Company Limited, and it is being founded by Dr. Morris Chang in 1987. So it's been around for more than 20 plus, coming to 30 years. And it is the world's first pure play foundry business, because before he founded this company, Intel, Micron, they would say that only the semiconductor companies that have manufacturing site and designs, they are the biggest player, not only purely producing semiconductor chips. So for TSMC, they only focus on manufacturing these semiconductor chips for their customers. So they don't design the chips, but they take on the design and they manufacture these chips. And these are the ticker symbols. So it is both listed in Taiwan Stock Exchange and also US New York Stock Exchange. So now, where does TSMC actually located within the semiconductor ecosystem? So this one is actually a simplified form. The overall ecosystem within the semiconductor industry is very complicated, but to simplify things, we will break it up into 4 parts. So the first thing is fabless, which means they only design the chip circuitry, which is NVIDIA. And then TSMC is under foundry, which they only make the semiconductor chips. And Intel is under IDM, which is integrated device manufacturer. So they start from designing the chip and then manufacture the chip. And finally, after the chip has been manufactured, they have to test it and package it to make sure that it's working. So this is known as OSAT, Outsourced Semiconductor Assembly and Test. So TSMC is actually under the foundry part. And now we'll further look into other parts of the TSMC background. So it is located in Hsinchu Science Park, Taiwan, and it has about 4 types of fabs in Taiwan, US, and China. So you can see that there's 12-inch, 8-inch, and 6-inch. What does this really mean? It means that within these fabs, they are manufactured the wafer size, which is 12-inch wafer, 8-inch wafer, and also 6-inch wafer. And the back-end fabs is mainly used for testing and also packaging the chips after it has been completed. And they produce about more than 12,000 products using 291 process technology. So the process technology, which we will explain later, is the technology that they use to manufacture the chip. Because other than they produce the wafer, they need to produce the chip on the wafer. So this is known as process technology for 535 customers in 2021. So where are the fabs actually located? For 12-inch gigafabs, they have about 6 of these. They are located in Taiwan and also China. And for 8-inch fabs, they are located in Taiwan, China, and US. And 6-inch is only 1 in Taiwan. And the back-end fabs, they are all in Taiwan, which consists of 4 fabs in Taiwan. So you can see that more than 80 to 90% of all these fabs are located in Taiwan. So only 2 fabs in China, 1 fabs in US. So you can see it's mainly concentrated within Taiwan. So anything happens to Taiwan, there goes our semiconductor chips. And now we are curious, they have about 535 customers. So who are their customers? So now we look at their top 10. So these are their customers, and we can see that Apple actually ordered the most chips from them, from almost 16% in 2015, and they increased until 24% in 2021. And other than that, when you look down the list, they are mostly fabless companies, which means they design the chip and they pass it to TSMC to manufacture the chips for them. Okay, so now we will see what products that TSMC really manufactures. So first off, the main thing that they do is semiconductor chips. And all these semiconductor chips are being used in these 5 major markets, which is in smartphones, high-performance computing, Internet of Things, automotive cars like Tesla, and also digital consumer electronics. So all of these things are being used in our daily lives. So imagine that one day if there's no more semiconductor chips, how will our life be? And now we will see what is the difference between wafer and chip, because sometimes people will use in between like wafer and chip. So when I was first doing this research, I got really confused, like why is it a 12-inch wafer and then suddenly a 5 nanometer chip or 3 nanometer chip? So now in this diagram, it actually explains that the wafer is the whole big piece that you see earlier, like a plate. And then on top of the wafer, they will fabricate this integrated circuit chip, which is also known as a die. And from here, they will insert this chip into electrical component, which ends up the end product looks something like this. So this is the difference between a wafer and a chip. Okay, so now why does the wafer size matters? Because earlier on when we were looking at the fab location of TSMC, there's 12-inch, 8-inch, and 6-inch. So why does it really matter, like how many inch of the wafer size? So when we look at 4-inch, which is about 100 mm, they can only allocate about 10 chips. But if we increase the wafer size to like 200 mm, which is approximately 8-inch, they can fabricate 25% more chips onto the wafer. And if it's a 12-inch wafer, they can incorporate more than 40% chips compared to a 4-inch wafer size. So a wafer, when they manufacture the wafer, is from the same process. But if they can increase the wafer size to bigger, then within one wafer plate, they can manufacture even more chips on it. So the larger wafer size can fabricate more chips. So now we are curious, like, okay, earlier on the video has showed very nicely like how is the wafer or the chips are being made. So this one is actually just a refresher in a simplified form for you all to better understand like how does the chip being manufactured. So first off, they will mold all the silicons into something like an ingot, a rod type. So you can see here the silicon ingot. And then they will slice the silicon wafer from the ingot. So imagine they make it into a big rod, and then they slice it into plates. And then on top of the plates, they will manufacture or fabricate the circuitry onto the wafer. So this is known as the process technology, or another term called as node. And from there, they will slice up or cut up the chips into small pieces and then package it into as a final product. So this is the simplified form of how the chip is being manufactured from the wafer. And now, earlier we are saying, okay, the chips are being fabricated on the wafer, but what is really a process technology or a node? So this one is actually a process or design rules to fabricate the circuitry onto the semiconductor chip. And we can see that right now they are aiming for a smaller node, because by having a smaller node, they are able to manufacture even smaller size of the chip to have a faster and also more efficient performance. And we can see that 5 nanometer, 6 nanometer, and 7 nanometer, and they are being used in all these different devices and industries. And then now you know that, okay, so this is a fabrication process onto the chip, but what does it really mean? What is this process really about? So earlier on, the video that Cayden has showed from Global Foundries, they mentioned about lithography. So this is how they fabricate the circuitry onto the chip. So they are using the light. So earlier you see that they're holding a pink box. This is actually the reticle mask, the photon mask, which is being designed by the chip designers. And then on top of the mask, they have the circuitry, and they shine the light, which is the UV light, onto it, onto the wafer, and then it's kind of like printing the circuitry onto the chip. So the smaller the light, they can print even smaller chips. Okay, so now we are roughly know like how they manufacture the semiconductor chips. So how do they generate their revenue? So in 2021, they generate about 56.82 billion USD, and almost 90% of the revenue comes from wafer. And these are the chip size or the process technologies that they provide when they manufacture. And for others, it's mostly about packaging and testing, mask making, which is making the circuitry, and also the design services, and also some royalties. So a bulk of the revenue is coming from the wafer manufacturing. And then we are curious, like, okay, so now I know that most of the revenue is coming from wafer manufacturing. So how do I know like which process technology earns the most? So in 2021, actually it was a 7 nanometer. So they take up about 31%, then followed by 5 nanometer, about 19%. And in the latest quarter, it is still 7 nanometer takes the most, and 5 nanometer is in second place. But you can see that 5 nanometer has slowly increasing in terms of percentage. And here I would like to point out is that in 2021, in their annual report, they have actually separated the revenue between how much is for wafer revenue, how much is from others. But when I was doing my research to find out this information on their quarterly report, apparently they did not separate it, so I have to put it in as a total revenue. But do keep in mind that there's a small portion of it is coming from others, but I do not have the information, so I have to show it as a total revenue. So there's no typo here. And now we are curious, like, the semiconductor chips are being manufactured, but where are they used from, or which industry are using the most from TSMC? So in 2021, it is from smartphone, which is about 44%. And in the latest quarter, it's actually from HPC, high-performing computing. So quite surprisingly, it managed to overtake the smartphone. Okay. So now in terms of geography, this is even far more interesting. So almost 64% is being sold to United States, followed by Asia Pacific, which is including Taiwan. Then China takes up about 10%. But in the latest quarter, US still takes up the most, which is 64%. But something to take note is that in 2021, China's order is about 10%, but in the latest quarter, China's takes up 13%. So, will China wanted to really take on Taiwan? We'll see. And now we are curious, like, where TSMC will further expand or grow the company. So first, one of the future plans is that they are now setting up overseas factory other than Taiwan. So the first place is in Arizona, US. So they are setting up a 5 nanometer chip production there. And then in Japan, they are also setting up a 12-inch wafer fab in Kumamoto, Japan. So here, TSMC is setting up their factory in Arizona, which is here. And for Japan, is in Kumamoto, which is in Kyushu, Japan. So this is the place where they are setting up. Okay, so next is that they are still doing research in the advanced chip technology, which is in 3 nanometer, and there's also 2 nanometer. So the 3 nanometer will be released soon, and 2 nanometer is expected to be released in 2025. So this is the timeline that they have, and we can see that their competitors like Samsung or Intel are also racing to research and develop on this advanced technology. Okay, so for 3 nanometer chips, Apple will actually predict to get this later in the later half of the year, but will it be appearing in iPhone 14? Some of the reports says maybe not, because it's a bit too late, and iPhone 14 is coming out soon, maybe in iPhone 15, who knows? So what does it really mean about these smaller figures? Because in this article, it mentions that the smaller the nanometer chip, the more transistors can be put on to the chip, and it means that it became more powerful and also more energy efficient. Okay, so now for 2 nanometer, they are expecting the production to be starting in 2025. And why do they want to further develop the chip to become even smaller? Is because you see that when the chips are getting smaller, they can improve the speed about 10 to 15%, and the power reduction, that means they are much more energy efficient, about 25 to 30%. So imagine where you're using iPhone 6 and also iPhone 12. You realize that even though iPhone 6 is very smooth and fast, but when you compare with iPhone 12, you will find out that iPhone 12 is even far more responsive compared to iPhone 6. And also people right now want things to be faster, especially if you wanted to get a ticket for one of your favorite singer, like for example, Jay Chou. It's like within few seconds, then the ticket gone. Then it was like, oh no, I missed the live concert. It's something like that. Okay, next we will look at economic mode and also their competitor. So for economic mode, they are one of the technology leader and they are researching on the latest node technologies, which is 3 nanometer and also 2 nanometer. And also they protect their patents and also their innovations with patent application. So as of May 2022, they have about 75,000 patent applications. And of course, their distribution network, they have a very large customer base, which is about 535 customers from fabless and also from IDM. And also their products are being used globally. So earlier on when we see at the second quarter in terms of geographic, their products are being used in US, Asia Pacific, China, even Europe and also Japan. Okay, so now we are curious, like how is the market share looks like for these foundry companies? So we can see that we compare between 2021 and also the first quarter of 2022. So we can see that actually 64% of the semiconductors are being produced in Taiwan and TSMC takes up about 53%. And when we look at 2022, 66% is from Taiwan and 56% is actually from TSMC, which is one of the reasons why US wants to bring back the manufacturing capacity back to the US. And now we will look at the competitors. So from here, we compare the revenue. TSMC actually takes up 56% of the revenue in 2021 fourth quarter, followed by Samsung, UMC, and the GF is actually Global Foundries and SMIC. So here we have a chart to compare between them. So we can see that among the 5, there are 2 companies from Taiwan, 1 from Korea, China, and Global Foundries is from US. And now we'll see that their production size of the wafer size and also the smallest node, because they manufactured different types of process technology, so it's impossible to list it out or else the list will be too long. So I only focus on the smallest node because the smaller the node, the more power efficient and also the more powerful is the chip. So for TSMC, it's actually one of the top rank because they are now currently manufacturing 3 nanometer and is expected to release later this year, and the first customer is Apple. And you can see that all of these chips are used in different markets. And only TSMC and Global Foundries are actually focused in like 5 different markets. Others are mainly like smartphones, consumer electronics. So you can see that TSMC has a very big market to market their chips. So maybe you can take a photo or maybe take a screenshot about this if you're really interested about investing in the semiconductor foundry companies. And now we will look into the financials. So earlier on, we know that the reason why the US wants to bring up the CHIPS Act is because they wanted to encourage the chip manufacturer to increase their production in the US soil. So by increasing the production, they can manufacture more chips, and by manufacturing more chips, they are able to increase their sales. So as an investor, we wanted to know that is the company able to generate sales? And for revenue means that the sales that is being generated from the product sales or from the services. So based on value investing methodology, we wanted to see that it's positive and it's also increasing. So for this, we'll give it a pass. And now we look at their net income. So net income is that we take all of the revenues and then minus off all the expenses used to manufacture the goods and end up the profit or loss. So for here, we also wanted to see that it's positive and also increasing. But when we look at 2019, even though it's not a drop, but it's kind of like staying stagnant. Why is it so? So when I was looking into their numbers, it's actually they increased the expenses in their research and development. But when we look at the overall trend, it's still increasing. So based on the value investing criteria, we will give it a pass. And now the operating cash flow. So the operating cash flow means the cash flow that is being generated from their normal business activities, and for this case, is the sales of the semiconductor chips. So if the cash flow is positive, that means the cash is coming in. But if the cash flow is negative, that means the cash is going out. So from this chart, it's positive and it's also on an uptrend. And based on the value investing methodology, it's considered a pass as well. However, when we are looking in the free cash flow, but before that, what is a free cash flow? So the free cash flow means that we take the operating cash flow and then minus off the capital expenditure, which is the expenses used to purchase the equipment or expand the production facilities that will last more than 12 months. And from there, the cash that is being remained is freely available for the company is known as a free cash flow. So for this one, we noticed that in 2019, there was a huge drop in there. So why does this happen? So again, we look into the numbers and we noticed that in 2019, there was a drop in the free cash flow. It's because they increased expenses in their capital expenditure. And when we look at 2020 and 2021, the capital expenditure is also increasing. However, the cash flow from operation also increased, which ends up that their free cash flow also increased. So now we come back to this chart. So we now know that this drop in the free cash flow is because they increased their expenses in the capital expenditure, which means they invested in their production facilities, invested into their production equipment. But based on value investing methodology, we want it to be positive, which based on the red line, it is positive. And when we look at the overall trend, it is actually slowly increasing. So based on the criteria, we will consider this as a pass as well. And finally, we will also look at the debt to equity ratio. So based on the value investing methodology, if the debt over equity is less than 0.5, which is a good thing. So what is debt to equity? Debt to equity means that for every $100 of the equity or capital invested into the company cannot take more than $50 of debt. So from here, the figure that TSMC has is about 0.35, which is less than 0.5. So based on the criteria that I listed out, it's considered a pass. So for these financial statements that we are looking at, it's just a preliminary for us to identify whether TSMC is it a good company. Actually, there are a lot more criteria that we will need to look at to determine whether is this a really good company to invest in. And now we will find out what are the potential risks that this company may have. So first thing is definitely the relationship with China. So you can see that Taiwan is the small little country in between two big countries. So first thing is that because there's pressure coming from China and the world is getting concerned, earlier on we've seen the market share that almost 60+% is coming from Taiwan. So it is no secret, it is not a secret that China wants Taiwan back into their own country. And it has actually made a very clear plan to say that I want Taiwan back. So unfortunately, this lady went to visit Taiwan and China renewed its threat to attack Taiwan. And one of the threats that they made up is that they cut off some of the Taiwan food imports. So kind of like trying to stop them. And TSMC chairman actually mentions that if China really invades Taiwan, then TSMC will no longer be operable and there will be a great economic turmoil because they can no longer produce the semiconductor chips. However, the China needs Taiwan more because earlier we've seen from the revenue by geography, in 2021, about 10% of the revenue is coming from China. However, the revenue actually increased to 13% from China. So, because when we look at SMIC, which is from China, they actually, the smallest node that they can manufacture is currently at about 28 nanometer, even though they are moving forward to 14 nanometer. But in order to catch up with US for the latest technology, they need even smaller chips. But currently, it's only TSMC is able to manufacture 3 nanometer. So, yeah. And also another thing is that the semiconductor sales are actually tightly correlated with the consumer device sales. Because if there's a drop in the consumer device sales, the chip demand will also slow down. So interestingly, in this article by Fortune, they said that the demand for the chips is collapsing after US President signs the CHIPS Act. And there's also news says that the consumer devices sales are slowing down and the chip demand is also starting to get slower. So to conclude it all, so TSMC is actually one of the world's largest chip manufacturer and it also is also an advanced microchip technology leader and it has a very large customer and distribution network. And some things to take note is that it's the tension between Taiwan and China. So right now it's kind of in a murky situation that will China invade or will China not invade? But this one is not something that we can control of. And also the chip demand is really tightly correlated with consumer electronic sales, because in one of the video they mentioned that the demand for the semiconductor chips is not by politicians, but by the demand of these by the consumer devices. So with that, I end my presentation about TSMC, and I hope you have learned a lot of things from this company, and I'll pass it back to Cayden. Thank you.
Welcome back. This is Cayden again. By the way, I'd like to thank Hillary, right, for doing all the work. So you realize that in about, I think she spent about maybe 35-40 minutes explaining to you the context of why TMC play a very important role. And since most of the manufacturing of the chips by TSMC is geographically located in Taiwan, right? And then Taiwan want to play this pro-independence game. Yeah, so right now, which is why one of the risks, right, is being listed on this side. The tension between Taiwan is really hard to say, you know, because the second delegation has really entered Taiwan. Wow, this is really hard to say, huh? So because of all this uncertainty, right, you have to really ask yourself, do you want to play this game by buying the shares of this company? Because the moment today you press buy, tomorrow the war starts. Wow, a lot of things will happen, huh? So you have to be very careful, right? And then just now, Hillary has also explained the difference between the chip designer, right? By the way, is my slides up? Yeah. Yeah. So by the way, there's also the difference, right, between the chip designer, which is Adobe, or this versus the chip manufacturer. And the reason why I need to say this is because just I think about 4+, right, there was this lady posted one question on our fan page, right? And then she asked, oh, can I buy Adobe? By the way, this is a very dangerous question, right? So she posted on our page, and then she said, can I buy Adobe? So in other words, the answer is either a yes or a no question. Yeah, so because we're not licensed by MAS, obviously I cannot answer such a question, right? So what I did was I redirected her, right, to our page, and then we did one symposium, and then we talked about Adobe in 2021, right? Yep, so she has to go and watch the video and so on. But that wasn't the first conversation, because yesterday the first conversation, right, is I was telling her that she needs to know what investing is all about. She cannot just rely on people and then become rich. There's no such thing one. Okay, so by the way, are the slides back already? Yeah, so I already shared the slides. Yeah. Okay, good. So this is a conclusion between the pros and cons, and we have showed quite a number of videos, and Hillary has described the entire cycle, right? So before I continue, I just want to let you know that the video, like I say, will be permanently here, So right now we have about 149 people watching this live feed, right? If you don't mind, can I just ask a very small favor from you? If you look at YouTube, right, there's actually a thumbs up. Right now, I only saw 4 thumbs up, right? And then we spend so many days doing all this. If you don't mind, I give you 5 seconds. Can every single one of you can just press the thumbs up just to boost my ego, right? So in other words, the larger the number, the more my ego is being boosted. There's one thumbs up right under this video on the left-hand side, right? Yeah, don't mind, you just do us a favor, do a thumbs up, Yeah, so while you press the thumbs up, I'll just continue, And then, of course, if you want to know more about the things that we do, you can always scan the QR code, a message pop out, you press, and then you'll be subscribed. And then just now when Hillary was talking, right, I actually went over to count the number of people who suggested whether they want to listen to investment-related topic to US or Singapore. Interestingly, even though most of us are located in Singapore, right, about 10, right, wanted US, about 7 in Singapore. Yeah, but it's okay lah. I think the next 2 sessions we talk about Singapore. So maybe have a fresh change. Our fresh change also give us some motivation. We have been like thinking about Biden for a long time. I think better switch. Or the next 2 sessions, I think we talk about Singapore. After that, we come back to US, right? Wow, fresh change for Hillary. Hillary. Okay, So let's play a game. Let's play an investing game. Inverted commas. So in front of you, right, in the slide, you can see 3 baskets. Okay, I think some of you should have played this before. So TSMC is the context over here, context, right? So I'm going to give you 3 choices, 3 choices, right? So ask yourself, if TSMC is supposed to be place in either basket A, basket B, or basket C, right? Whereas basket A, that means if you buy, you felt, right? Based on what we have shared, or it's low risk, high return. Or is it a high risk, high return because of this like Taiwan, China, US, right? Or you think it's a high risk, low return? Okay, so I'm going to give you 5 seconds. Is either type A, B, or C. Wow, David, very nice. David said done. Let me just check the number of thumbs up. Okay, I think mine I need to refresh, but I don't know how to refresh. It's okay, huh? 57 thumbs up. Oh, very good. So Hillary said 57 thumbs up. So my ego just boosted by like maybe 1000%. It helps out with the YouTube metrics, so you all press thumbs up. That's the first time I ask people to press thumbs up. I've forgotten for the past few months. Should ask you all to press. Okay, hey, wait, other than pressing, can you please type you either want the A, B, or C faster? Huh? Oh, there's a poll, huh? Okay, there's a poll that I think Susie has done up. Okay, done already, the poll done, right? Yeah, so later I think I maybe need to see the poll first. Yeah, so I give you another 5 seconds, right, to do the poll. Then I tell you the result, I'll tell you the result, right? A, B, or C. But remember, investing is not a popularity contest. Most people when press A doesn't mean that it's A, you know. Huh? It's A, right? Yeah, so I need to see the poll, yeah. Okay, so the results is out. I think in the chat box, right? Wow, 66%. 66% say A, yay, later buy. Wow, dangerous. It's B. A is B. Oh, it's B. Oh, B 66%. Oh, okay, sorry. I think I need to change specs. Okay, B is 66, A is 22, and then C is 11. Wow. So it looks like 100 plus of you are quite conservative. You all hear the word only, you all put B already. No, at first I thought you all would say A, right? Okay, wow, this one to my surprise. To my surprise, you all say B, high risk, high return. Okay, so if you say high risk, high return, what does it mean? Is it go or no go? It's a no go, right? It's not a buy. Now remember, I'm not saying not a buy, I'm just saying based on your vote, right? It's B, it's not a buy. Then C, C is a gone case. This is a gone case, right? Yeah. Then of course, based on Buffett's, Charlie Munger's thinking, right? A is a buy, A is a go, right? A is a go, But just to let you know that for all the information that Hillary has shared, some information are missing, quite a huge piece, right? Like for example, she shared some criteria. Actually, there are many other ratios we need to go through. Yeah, for example, let's say current ratios, let's say owners' earnings, let's say outstanding shares. There are a lot of things Hillary need to go through, but if we go through, I think by the time we finish at 11 p.m. Right? Yeah, so just take note there are many things we need to go through. And the second thing is we also want to know, right, assuming it's A. So now, of course, the question is when to buy. Yeah, and to know when to buy, right, we need this value, we call intrinsic value. And we intentionally didn't want to show you because we worry that you anyhow press. Also, we withhold certain information. But right now, I think at least all of us are much more educated as compared to before, right, in which we watched the video. So just to let you know that a TMSC is the manufacturer, is the foundry, right? And in the very beginning, when I play a video, the video talks about, hey, to make the chip, right, there's a lot of process involved. And the process is not a human process because they are run by machines. And the machines are the size of 2 football fields. So that's how big the manufacturing plant is. So one machine, I think, is a tens of million. Yep. So in other words, in the entire process, not only the design, lithography, printing, the manufacturing, right? So you need machine to do the work. Okay, hi, ladies and gentlemen, welcome back, right? And then just now I was talking about the company that design and supply the semiconductor manufacturing equipment. Remember to companies like TSMC and so on. Of course, generally they talk about providing materials, a solution. Remember, to make nearly every chip in the world. Whoa. That's a very big company, right? So just take note, the firm systems are used in nearly every major process step. From just now what Hillary was saying, that the block of silica, right, and SISIs all the way until the final step of the chip, except lithography. In short, this is a very, very big company. Now, without diverging too much detail, let me just share with you some of the numbers. And then number one, the numbers must be comfortable. If you're not so comfortable with the numbers, then there's no point go and dig out information about the company. Okay, so the first one we want to talk about is the revenue of the company. So if they sell one machine 10 million, so 10 million is the revenue. So what do we expect, right, as an investor? So what we expect is we want the number to be positive. We want the number to be uptrend. So as long as it's positive or uptrend, right, it's a pass. It's a pass, right? So that is the revenue, okay, revenue, right? So for Wendy, I think we take it offline, right? Take it offline. Alex, can you constantly engage Wendy so that tomorrow you can follow her what to do, right? Yeah, follow what to do, because right now with the chat, right, sometimes get a bit distracting, right? Distracting. Yep. So just take note of revenue. We want it to be positive. We want it to be uptrend. And in this case, it's a pass based on value investing methodology, right? But just take note how revenue is vanity. So a company has a lot of revenue, but it may end up losing money. So this is only one criteria that we look at, right? Yep. So the next one is net income. Net income. Why we want to look at net income or sometimes a profit or loss, right? Because revenue is vanity, and then profit is sanity. So what is profit? What is profit? Profit is quite easy. You simply take all the revenue minus all the expenses. You have something called the profit or loss, if it's losing, right? Or the net income. And of course, for net income, we want the number to be positive. And of course, we want the numbers to be uptrend. So these are the two major criteria we need to look at. And for this company that produces machines that makes the chip, is a pass. So revenue pass, and then profit sanity is also pass. Now let me give you an example where it's failed, right? For example, a couple of months ago, I think some people was talking about this SEA, I think own Shopify, right? It's a super stock, So they said it's a super stock because the revenue grows exponentially, which is true. Yep. So this is the zero line, so it's positive. It grows exponentially, which is true. But remember, right, revenue is a vanity. Yeah, even for my company, I can make lots of revenue, but I can lose money, Yep. So what do we look at? Remember, you need to look at revenue and the profit and loss, or sometimes net income, right? So if you look at the net income, do you see that it's get worse and worse? Yeah, get worse and worse, right? So profit is sanity. And of course, if the profit goes down, you cannot expect the share price to go up, right? And if it goes up, of course, it may go up temporarily. But after that, when gamblers, gain sanity, right? Gain sanity, that's it. They will start selling stocks because it doesn't make sense. Why would they want to buy a company where the profit keep dropping? So revenue is vanity and profit is sanity. So let's go back to the company. So this C, right, recently was featured in many articles where they said, right, this SEA posed a 1.2 billion net loss in quarter 2. Quarter 2 is the second quarter of this year. Even despite the fact that Shopify, right, has a revenue that really outbeats Alibaba. So eventually still lose money. Yeah, so have to be very careful. So this is not a super stock as of now, right? Yeah, as of now. So be careful. So let's go back to the company that manufactures the chip machine. So we have done revenue. Yeah, by the way, the company is not ASML, right? Yeah, it's not ASML. So Alex, you can engage Wendy outside this chat, right? So revenue is pass, uptrend, and then net profit is pass, right? Yeah, or net income is pass, right? Okay, Then of course the next one we look at the cash flow for operation. So for example, they sell one machine, the money comes in. So when the money comes in, right, it's a positive number. Money goes out, it's a negative number. So overall, across years from 2013 until 2022, right, not only the money comes in because it's a positive number, right? Yeah, the money that comes in gets bigger and bigger, which is why it's uptrend. Yeah, so this one based on value investing philosophy is also a pass. So third one, right, cash flow is a pass. Okay, and then the fourth one, which is the free cash flow. So what's the free cash flow, right? A free cash flow is you take the cash flow for operation, which is just now what you saw, and then they buy equipments and so on, assets. As long as the asset, they will last more than 12 months or 1 year, right? It's called a capital expenditure. So in other words, if they take this cash flow, they buy something, still have cash flow left that is freely available, right, for people to use. So that is called a free cash flow. So of course, free cash flow, we want the number to be positive, right? Yeah, not only we want the number to be positive, we want the number to get bigger and bigger, which is why in this case it's an uptrend. So it's a pass. So revenue is a pass, net income is a pass, cash flow from operation is a pass, free cash flow is a pass. But there are many other criteria. So let me just share with you another criteria so that you know these 5 criteria are the criteria, right, to gauge, a quick gauge of a company. So in case somebody here, Shopee, sorry, not Shopify, so somebody tell you, right, let's say a company is doing well, just take these 5 criteria, do initial filtering, right? So let's look at the debt to equity ratio. We want it to be less than 0.5, right? So what does it mean? Debt to equity, right? Yeah. Equity is the money that you invest in the business. So in other words, if the equity is $100, yeah, we don't want to borrow more than $50. That's why it's on top, must be less than $50. And because of this, right, the ratio is less than 0.5. Yeah. So here it was okay, okay, right? Then here it exceeds, exceeds. But the lucky thing is right now is on a downtrend. And we saw the quarterly report, right? The debt equity ratio is healthy, which is less than 0.5. Okay, so overall looks good. Revenue looks good. Let me write this down, right? Summary. That later I can show you the intrinsic value, right? Revenue looks good, pass. A profit, right? Uptrend, also pass. Third one, right? Cash flow from ops, yeah, also pass. Fourth one, right? Free cash flow, right? Also pass. And the debt also pass. So remember, these are 5 criteria for anyone who are investor to get start off. If all these fail, then no need to say. Actually, profit fail, there's nothing much to talk about. Right? Profit fail, usually cash flow will fail, this one will fail. And if this one debt increase, this one hard base already. Okay, hard base, right? So these are 5 very blunt instruments that you can use to gauge any company, whether it's good or bad, in case somebody want to like, hey, this is good or bad, right? Now, so let's look at the intrinsic value, intrinsic value, right? Now, this black line over here is the share price. Is the intrinsic value. Yeah, so if you want to buy the business, you want to buy below the intrinsic value, which means that this zone over here, right, is called an undervalue zone. Yeah, this orange or light brown zone, right, this is an overvalue zone. Remember, you will only consider the intrinsic value provided it's good. If it's, let's say the SEA, right, is bad, you shouldn't come to this stage. You wouldn't even have to make a decision. So right now it's here, can you see here? Let me just point here, right? Right now, this is the current price. So since the current price is beneath, right, is less than the intrinsic value, that means this company as of today is still undervalued, right? Yep. So if you look at some of the things like, for example, the ASML, it's quite dangerous for me to say yes or no, yes or no, because if I say yes, then later you go press, right? Now this is not the way to invest in things, because you do not have the deep analysis that Hillary has done. I think it's quite dangerous. Okay, so with that, I just go back to that slide again. These are the offer that we can do for you. Yeah, and that's all. So Wendy, thanks. 70 free trial is for people to have a feel, right, of what is it all about. Okay, so I shall leave my slide over here. Sunny, my mouse went missing, right? So I'm going to stop share. Goes back to here again. So just take note, we are VIA, right? Value Investing Academy. And of course, we care to make you a better investor. So the link is over there, and you'll be permanently be there. So I shall see you next time in our YouTube together with Hillary and the rest of our team. Okay, so goodbye. Have a good rest.